Renewable energy industry is one of the fastest growing industries globally, and any long-term investor would be crazy.
Hey there guys, what's happening and welcome back to our channel. Clean energy stocks are among the most active in the stock market this year, owing to the current situation of the globe. This may, of course, be true in the case of global warming and climate change. As a result, renewable energy businesses are expected to be the future of energy generation. It should come as no surprise, therefore, that several of the leading renewable energy stocks have seen significant gains over the last year. So let's check out the top clean energy stocks to buy in 2021. Number 5. Solar Edge Technologies.
A photovoltaic system consists of PV panels, which produce DC power when exposed to sunlight.
Solar Edge Technologies, which if you haven't guessed from the name, is a firm that hopes to gain from the development of solar energy. Solar power, being one of the most conventional methods to produce clean power, makes it a safe bet. The firm creates and distributes direct current optimized inverter solutions for solar photovoltaic PV systems all over the world. The company's improved inverter technology optimizes power output at the individual PV module level while decreasing the overall solar PV system's energy cost. The company's stock price plummeted when it released its first quarter results, which showed sales of $405.5 million, which was down 6% from the previous quarter. The announcement comes after the business warned that rising transportation costs might eat into profit margins in the future. Solar Edge is, without a doubt, the industry leader in power optimizers. Its components are installed in a standard solar panel, giving it access to vital information regarding the system's efficiency and status. This demonstrates that the firm can monetize its power optimizer devices and has a cash stream from monitoring systems. Solar Edge is extending its services in the business and utility markets, in addition to residential solar-to-field development. Solar Edge's stock has been battered down, but it's still not out of the woods in my opinion. If anything, the recent drop in SEDG stock may provide an opportunity for long-term investors to purchase the company at a lower price. Number 4. Chevron.
Market conditions continue to still be challenged in the downstream. I mean, we're not operating back at a full economic recovery. We continue to operate very safely and reliably.
We understand that Chevron Corporation isn't precisely a green energy stock. However, its recent collaboration with Toyota Motor Corporation to investigate hydrogen production and commercialization is a step in the right direction. Commercializing the hydrogen economy, of course, is not a possibility in the near future. Nonetheless, the firm has a few gimmicks under its sleeve. It announced in early April that it would provide Japan's Hokkaido Gas Co. Limited with roughly 500,000 tons of liquefied natural gas over a 5-year period beginning in April 2022. CVX stock is popular among investors, including Warren Buffett, because of its robust balance sheet and decent growth potential. After all, we're dealing with a corporation with a 140-year history. And perhaps most significantly, it pays a high dividend yield of almost 5%. Despite this, the firm hasn't sat on its laurels. Is CVX stock a suitable stock to buy in right now because of its hydrogen initiatives to help the green economy? Number 3. First Solar. First Solar is a solar panel manufacturer as well as a utility-scale PV power plant supplier. It also offers financial, construction, and maintenance services as well as end-of-life panel recycling. Today, the company's integrated power plant solutions provide a cost-effective alternative to fossil fuel power generation. Despite the fact that FSLR stock has been trading sideways recently, Bank of America and Citigroup have just upgraded it. The firm has recently revealed that Series 6 Cure or copper replacement, its next generation PV technology, has the industry's lowest authorized degradation rate of 0.2% per year. This unheard of deterioration rate is up to 60% lower than that of traditional crystalline silicon devices, ensuring that the module will retain at least 92% of its original performance at the conclusion of its 30-year guarantee. would now be a good moment to add FSLR stock to your watch list with lockdowns removed and production capacity returning to pre-pandemic levels? Number 2, NextEra Energy.
We're passionate about generating clean, renewable energy while protecting the environment and giving back to the community.
NextEra Energy, based in Florida, is another major renewable energy firm. Florida Power and Light Business, the country's largest rate-regulated electric utility, is owned by the company. It also owns NextEra Energy Resources, which is a competitive energy business that is now the world's largest generator of solar and wind energy. Since the beginning of the year, the stock of NEE has been moving sideways. However, for investors who believe in renewable energy's long-term promise, this might be a good time to purchase. One of the company's businesses, NextEra Energy Resources, delivers long-term contract-based renewable energy to others. The firm claims to be the world's largest solar and wind power generator. This Florida utility is at the forefront of renewable energy development, and it's expected to be a significant growth engine for many years to come. In addition, the firm announced its intentions to develop Minnesota's first sustainable natural gas facility with Opal Fuels. In particular, this may provide 6 million gallons of renewable natural gas equivalents each year. Would you consider buying NEE shares today given these developments? Number 1, Brookfield Renewable Partners.
And that's Brookfield Renewable Partners on the New York Stock Exchange and BEP.UN on the Canadian Stock Exchange.
Brookfield Renewable Energy is one of the largest publicly traded renewable energy platforms in the world. A total of 23,000 megawatts of capacity is in the pipeline for the firm. Investors rekindled their interest in the firm last month after the Biden administration announced a target of building 30 gigawatts of offshore wind power in the United States by 2030. In North America, South America, Europe, and Asia, it has over 6,000 producing plants. The company's objective is to generate yearly total returns of 12 to 15% over the long run. Hydroelectric power, which accounts for around 62% of the company's portfolio, is also a global leader. Revenues fell 2.9% to $1.02 billion in the second quarter compared to the first. However, investors should not miss the fact that the company's funds from operations increased by 21% in the first quarter compared to the same period last year. In addition, the firm has invested or promised to invest $1.6 billion in a variety of transactions. The business announced to investors that it had concluded its first offshore investment in the first quarter, and investors appear to be overjoyed by the news. Is BEP stock a top renewable energy stock to purchase now, given all of this? Do let us know your ideal clean energy stock to invest in 2021 in the comments down below. Then don't forget to like this video, subscribe to our channel, and hit that bell icon. And with that, I'll catch you guys later in another video. Bye now.